Hello, TikTok. Jim Malone here, coming to you live on Dallas Trading Floor. I'm also on YouTube at youtube.com/Dallas Trading Floor. And I'm on Twitch at twitch.tv/Dallas Trading Floor. I'm on Periscope at pscp.tv/Dallas Trading Floor. And I'm also on Facebook Live at Dallas Trading Floor. So interesting day today. We are definitely, it's pulled off a little bit from yesterday. Seems like the Dow and everything is moving down a little bit. I just want to show you some of these slides. By the way, for everybody that's looking on TikTok, if you'd like to take a look and see my charts as I'm showing them, they are available on YouTube. So it's youtube.com/Dallas Trading Floor, and you will see the live as it's happening. So here we go. I'm going to go over to the slides. Here we go. So basically, what's happening in the market? Yep, okay, there we go. Yep. The market direction is basically still uptrending, but the S&P 500 and the NASDAQ, they're both off. We do seem to be having a little bit of a pullback today. There is a slight movement in the market to the downside. There's been renewed interest in gold as of late. I think that's due to the fact that we may be seeing potentially some inflation towards the end of the year. But right now we're not. The economy is still, of course, in the lockdown. And one thing I want to bring to your attention is that the numbers from many of the airlines have been horrible. And also, restaurants are bad. There was a very bad report from McDonald's yesterday, and that's showing weakness in the restaurant industry. So the industries that are related to serving the public don't seem to be doing quite well. So we may be getting a little bit of a weakness in the market as a lot of these facts come into play. Now, the interesting thing about what the chairman of McDonald's said was that it was a very difficult quarter, and they don't expect it to. They expect it obviously to get better, but I believe that we're going to see a little bit more weakness in the market, for a while, because until people get out there and buying again, we're going to see weakness in the market, and I think that's just a fact that we have to deal with. So I am moving my investments away from customer facing more towards industrial type of investments. And I will give you a rundown on what I have later. I just want to show you, this is a psychological indicator that a lot of people use. It's called bulls versus bears. And currently, we do have, at least for the long term, we are at a record low of bears. So the bears are only 17.30% of all of the analysts. This is the analysts. This is what they do. They take a survey of all the analysts, and they see which analysts, what their feeling on the market direction is. Currently, the bears are definitely in the ascendancy, with 56.7 of all the bulls, of all the stock, all the stock analysts, showing that they are bullish on the market, at least in the mid to longer term. So even though the market may be saying right currently we have limited retail and sales and those kind of things, the outlook for the mid and long term typically is good from the analysts. And this is basically what the analysts have been saying. The next slide I want to show you, of course, is the spider. And this has definitely moved a little bit down. The key level here on the spider is 325, and it has moved a little bit lower than that, about 0.04% down from that. Now, as you remember, and I'm going to show you, hopefully on this chart you can see it, this low point here was made on March 23rd. That was the lowest point of the market. And that was a spider was selling at that point for 218, and then it's moved up ever since. Of course, that's when the heavy-duty stimulus came into the market, and we've been moving up. There is some disagreement on whether or not we're going to retest the low of 213, But I do believe that we probably won't. And the reason is because of the unprecedented amount of liquidity that the Federal Reserve put into the market. So this is part of the reason why I think we're moving to kind of a phase two, and people are anticipating inflation, and so they're looking for a safe haven. That safe haven, traditionally, of course, for inflation has been gold, and that is why I think the gold stocks are heating up. I do have a interesting gold stock, which is very inexpensive but top rated, and I'll show you that later on, in the slides. So, also, we do send these out on our trade alerts. We will hopefully having a trade alert going out today. We're having a little server difficulty, and so we're not able to get all of our trade alerts out, but we're working on that, and hopefully we will have those trade alerts out to you. To sign up for the trade alerts, it's super easy. You can sign up. There's no problem with that, and just go to dallastradingfloor.com. And if you're watching on TikTok, you can just go to my profile, hit the link, and you'll be taken right to the subscribe page. It's free. And there's no obligation, and cancel anytime you like. So it's kind of a good way to trade along with us here at Dallas Trading Floor, and you'll be able to see some of the how we're trading the market, so that hopefully we can make you money as well. I want to also show you the Qs. Here's the QQQ. It is off today, $1.54. This is where the weakness has been in the last 2 or 3 days. It's actually been in the big cap tech stocks. We are looking at potentially some of the FANGs weakening a little bit. There may be an opportunity to come into Facebook here. I am currently not in Facebook, but I do believe that Facebook may be presenting some opportunities very shortly here. It's under a lot of attack by many of the regulators and the antitrust folks, but it still has advertising revenue, even though a lot of the big advertisers have pulled out. Now, they've pulled out mainly, I believe, to save capital, because they just cannot, it does not pay as much to advertise at the moment, because people just aren't buying in the retail space. That's because, of course, the lockdown. So that's one of the excuses I think they've given for reducing ad spend has been, that Facebook is having issues with some of the hate speech and that kind of thing, some of the people that are on there. But anyways, I do believe that the stock is powerful and has potential legs. And hopefully I will be going into that later on this week. So let me show you the next slide, and that's the diamond. The diamond covers the Dow Jones. And of course, most of the people, if they're listening on radio or television, they're always going to see, they're going to say what the Dow is doing. Basically, the Dow Jones is only 30 stocks, and it's a very old index. It started before the 19th century, if you can believe that. And it typically is the biggest stocks in many of the industries. There was a disappointing earnings from McDonald's, which is one of the Dow components, yesterday, and that's one of the harbingers of the retail the retail sales environment going forward. So there is a little bit of weakness in the Dow. It's down to 265.40, and it's coming back to the 40-day moving average line. I suspect that we're going to see a bounce on the Dow at about 261. That's where I'm guessing. And my reason that we're going to see a bounce there is because we've seen a bounce twice in the last about 2 months, right at about where the 50-day moving average is for this ETF. So here is the chart, and as you can see, this red line here represents the moving average, the 50-day moving average line. As you can see, it's bounced once and twice, and then it's probably going to bounce a little again. So I do expect a little bit more weakness in the in the Dow Jones going forward, but I do believe we will see a bounce on it. So, okay, so let's go to the next slide. This is my sort of my trade of the day, and this is basically a company called B2 Gold. It is a very inexpensive stock. Now, it's an interesting stock. It's a Canadian company that basically mines gold basically in Central America and in the Philippines. They have mines in Nicaragua and in the Philippines. So it's quite an interesting stock. It is a top rated stock. It has a composite rating of 99 out of 99. So that's kind of what you want to look for. And what's particularly unusual about this is typically to get a composite rating of a 99, it typically is a much more expensive stock. Typically it's going to be, at least $20 or $30 to get a composite rating of that. That's just how it works. It is being accumulated, and this is very, very interesting. And the chart is quite good on this. As you can see, it's moved up, and then of course the whole market moved down in this little movement down, and then it formed a cup, and then it is formed a handle, and is now moving up. Now, it is slightly extended from its buy range. I calculate the buy range on this as being 574 to 603, and it has moved up from that a little bit. Currently, when this slide was taken, it was 684. I do believe that this is an unusual opportunity for a relatively low price stock that potentially could move much higher based on the demand for gold. We are seeing a demand for gold as gold has moved beyond the 1880 pivot point, and it looks like it's moving, and it's going to move above. It looks like it's going to move above $2,000. So we're going to see some more interest, I think, in some of the gold mining stocks than we've seen in a very, very long time. But anyways, the symbol on this one is the symbol on this one is BTG. So if you have a pencil, just take it down, BTG, and I will have this on the trade alerts as soon as we get the server working again. So BTG, it's a low-priced stock, but I think it may have some legs and hopefully be pretty good. I want to show you another low-price stock that I think also has some very good potential. Not quite as good as BTG. It's not as high a composite rating. It's only 85. Let me show you this one. This is LightPath Tech Incorporated. Symbol is LPTH. It's a very, very inexpensive stock. Typically, I don't buy stocks in this price range. It's just too low for me, but this might provide an opportunity to watch list this stock. So take a look at this one. It's got a composite rating of 85. I don't recommend a buy on this one yet. It just doesn't show enough strength yet, but I think this is a potentially good watch list stock. So if you're looking to follow along, this is a good watch list. I also want to tell you that we put out these trade alerts all the time so that you can see this in more detail. The way you can get these trade alerts, and they're totally free, by the way, is to go to DallasTradingFloor.com and just fill in the little box and hit the subscribe button, and you're good to go. And you'll be receiving it right in your inbox as we send them out when, of course, our email server is working. So hopefully, we just changed email providers, and so we're having a little bit of issues regarding that. So we'll have them out shortly, but please go ahead and sign up at DallasTradingFloor.com. And if you're looking on if you're looking on this on TikTok, just go to my profile, hit the link. You'll be taken directly to the subscribe page. And of course, you'll get all this information. And by the way, if you're on TikTok and you want to see these charts that I'm showing you, it's available on YouTube. Just go to youtube.com/DallasTradingFloor. Okay, so LightPath, it offers a pretty good opportunity, and I think you might want to consider it. LPTH. And let's see. Just so everybody, just to keep me honest, I am showing you basically my portfolio as of now. I am in Netflix. I am in Teladoc. I'm in Blink Charging. It's up today, believe it or not. I'm in Tesla. It's down a little bit at $14.49. I will probably be exiting Tesla at the end of the week if I am called at $15.30. I've sold a call option on it. I'm in Audio Codes, and I probably should have closed this trade a little bit earlier, but I'm going to hold on through earnings. And this is not, I don't own the stock on this one. I have what they call a bull call spread on this one. It's a 35-45 bull call spread, and it expires on August 21st. So hopefully I will see a little bit of recovery there. I am currently in a slight loss position, so I'm just trying to figure out what to do on this one. By the way, this brings up a very important point. If you are in a loss position on any of your trades and it is down more than 8%, consider selling, because that is the stop loss that you want to do, because if it goes lower than that, it's more difficult for it to come back to get back your capital. So if you buy a stock and it retreats 8%, consider selling it. It's the best way to go. I use this rule all the time, and it saved me literally thousands of dollars in losses. So if you do have a situation where you are, where you are going to be, where you've gone down to that, if it goes down 8%, consider selling immediately. So here we go. Back to the questions. Hey, thank you very much. I so appreciate it, Jeffrey. So appreciate you. Colleen, what do you think of WMT? Okay, this is Walmart. Let's take a look at the chart on Walmart. I'm just going to bring it up here really quickly. Walmart, WMT. And Walmart has been doing, well, even in this downturn. Kroger and Walmart are both doing well in this downturn, mainly because people aren't eating out as much. They're having to shop, and they're definitely taking advantage of that. So let's look at the weekly chart on this. When you're looking at charts, just for your information, it's best to start with the weekly chart, because that will give you a very good idea of what the chart formations are. And then when you're looking to go more tactical, you want to look at the daily chart. So here is the chart of Walmart as it stands. And here we are. It's number 3 in its category. Costco, of course, is number 1. COST is number 1. It is moving up today, and we're just almost at the end of the trading today. It's a composite rating of 72. It's not one I would buy, by the way. Typically, I have a rule, and the composite rating I like to see is at least 80. And why? Because if it's 80, it aligns with all of the buying criteria. And typically, one of the most important buying criteria is it being accumulated by the funds? Because here's the thing that I think everyone should know. Retail investors cannot move a stock typically. There's just not enough of them. What moves a stock is big institutional investors moving in and out of the stock. And that is shown basically in this composite rating. So typically, I like to see at least an 80 to buy it. Now, it does have a fairly nice pattern. It does look like you have a cup here, and there's a little bit of a handle. But this really isn't a cup with a handle. This is really a cup only. So is it going higher? I don't know. Let's take a look quickly to see what the reporting date is. Okay, if I could move that down, perfect. All right, it's gonna be reporting on August 18th, and let's see. It looks very good, but unfortunately its industry rank is not good. That is the industry rank, as you can see on the company fundamentals. There are 197 different industry groups. And this is unfortunately not in the top one. I guess it's right about the top 1/3. I typically only like to buy stocks that are in sectors that are in the top 1/3, and that gives a better chance for success. Now, Walmart is sort of a special case, because it sort of straddles many of these categories, being both in the retail space and in the online space with their Walmart.com. So I like it, but I think that there are other better plays than Walmart out there. I think Kroger is a better bet in the space currently. So that's kind of my opinion on that with Walmart currently. Generally worried about the coming inflations and devaluation of the. Yes, thank you, Dave. I so appreciate it. This is a really good question. The reason this is such a good question is because, and we can see that there's also, your concern is not unfounded, because basically what's happening in the market is anytime there is inflation pressure, you see the gold miners typically move higher. And that's definitely been the case here. We're seeing the gold miners basically do much better than they did before. Now, I showed you an under $10 gold miner. This is sort of a junior gold miner and not necessarily a top-rated stock, but it has very, very good fundamentals. If you're looking to move into a gold stock, the stock I recommend wholeheartedly is KL, Kirkland Lake Gold. It is a Canadian gold mining company that has positions it has mining operations in both in Canada and in Australia. That is a terrific advantage, because of the political stability that you have in Australia. Many of the other really good gold mining companies are based in South Africa, but there's issues in terms of political tensions there. So it tends to weigh on the values of the stock. But let me show you the chart of KL right now. And I think this is definitely worth looking at. It's got an extremely good chart. I'm going to show you the weekly chart here. It is breaking out from a cup and handle formation. And this typically means it is going to move higher. As you can see, this is the cup here, and it's moved, and this was a very short handle, but it moved up and it's gapped up. It's currently up 2 cents, about 0.04% at 50.65. So quite a good chart. Also, it's #1 ranked, and it's got a 99 composite rating. So if you're interested in possibly protecting some of your portfolio if you have in cash, here's what I would consider. I would consider possibly exiting any investments that you have in the financials, because I don't think they're going to do well with low interest rates and potentially high inflation. But I do think that the gold miners might do well. So that is something that you might want to watch list. KL is the symbol on that. So it's pretty good, and I think you really like it. And I think that's a very, very good question. Also, invest in Shopify before earnings. Here's the thing about that. I mean, here's the tip. I wouldn't invest in Shopify before the earnings. And this is just, kind of my experience. Here's typically what happens when a company posts really good earnings. And I think Shopify is going to post some spectacular earnings. But here's the thing. There's a lot of expectation in this stock. Basically, the old adage is very, very true. And that is, buy on rumor, sell on news. So I do believe this thing will see a drop after earnings tomorrow. So I wouldn't buy this one tomorrow. I would wait until after earnings have come out to see if it comes down. If it comes down, then it will probably likely bounce up, because I think this is a very, very strong stock, and I do think that it will move higher. But I don't think that it's a very good strategy to buy it before earnings. I typically don't like to hold physical stock into earnings because of this. Even the very, very best companies typically will have a chart action like this. They'll come into earnings, and then they will, and when earnings happen, even if it's a great number, they will drop. And the reason that they will is because there's a lot of expectations that's been built into that. Now, typically after they've dropped, they'll move higher. So let's look at the chart on Shopify, which is tremendous. And for everyone out there that doesn't know this, Shopify is a company which basically powers many, many, many of the websites that are not, the Amazons and not the Walmart.coms. And so this is just tremendous. It's a Canadian company. It's done extremely well, and I think it's going to continue to move up. It's a little bit off of its highs. It was above 1,000. It's currently trading at 985. I do think that we're going to see a little bit of a drop when it declares earnings. I think the earnings on this are going to be very, very good on Shopify. That's my viewpoint. Now, even in its group, though, it is not the top rated. The top-rated company, and that's AudioCodes. I have a bull call spread on that currently myself. So let's take a look at the fundamentals on Shopify. Here we go. It's going to announce, of course, tomorrow, just as you indicated. Its earnings per share last quarter have just been stellar, 217% up. It just can't get much better. It's on one of the top groups. It's in the number 3 ranking out of 197. So that's kind of definitely where you want to be. It's in the computer software enterprise segment. The pre-tax margin 4.9%. Just everything is looking good here. Everything is looking good on this. But I do think just because of the way stocks trade, especially stocks that are highly rated like this, and will probably beat earnings. Even with that, I think that you want to be very careful. You want to wait a little bit on this, wait until after it reports. So I think that that's going to be a better strategy for you to make money. So, okay. Thoughts on buying Intel in holding? Okay. Well, if you're just looking to do a buy and hold, why not just buy the whole index? Why not just buy the SOXX, which is the Philadelphia Semiconductor index ETF. I mean, here's the problem with Intel. Intel has been underperforming in this particular vertical for a while. It's a great company, but it is not, it is not NVIDIA. It is not some of the other stocks. Let me show you the chart on this one. It is down today, and it's down significantly. There we go, Intel. So let me show you the chart on this one. There we go. And it is down. TSM is number one. This is Taiwan Semiconductor Manufacturing. And I think that that's number one in the group. And Intel is only 13th in the group. Now, I am not throwing rocks at Intel. I think it's a great company. It does pay dividends. But look at this chart. You're seeing a tremendous amount of selling going on here. And let's look at the weekly chart here as well. I just don't think you want to buy this. This is not a chart that I want to buy. As you can see, there's been a huge sell-off, and this was after earnings. This is typically what will happen is, there will be this kind of action on the chart. This is one of the reasons why you want to consider selling your position going into earnings. Now, a safer way, if you want a kind of a set and forget way to do the semiconductors, I recommend an ETF called the SOX, SOXX. And what this is the iShares Philadelphia Semiconductor Index. It's down a little bit today. It's actually down quite a bit, but it's a little bit more stable. I want to show you this chart so that if you're looking for a long-term gain and stability, might be something you want to look at. Now, when you're buying ETFs, it's a little bit different than when you're buying individual shares. When you're buying individual shares, you typically do not want to buy on the dips, but for an index, for an ETF, buying on the dips is fine. It's fine because it's a basket of stocks. When you are in a individual stock, you want to buy on higher highs. That's why I spend so much time talking about chart patterns and the best chart patterns, because typically, if you have the right chart pattern, the stock will push up after that, and it's a good way to go. So if I'm looking for Intel, if you're looking for individual stock, consider TSM instead of Intel. I think it's got a better chart, and I think it's a lot less expensive. We just had the bell, so we're just after hours now. But let me show you the chart of TSM, Taiwan Semiconductor Manufacturing, and let's take a look at that real quick. All right, here we go. Taiwan Semi is down as well. So, but it has a little bit better chart than Intel does. I'm going to show you the weekly on it. Yeah, there we go. Okay, so here we go. Here is the chart for Taiwan Semiconductor Manufacturing. Look at that. It's very, very nice. That chart is moving up very strongly. A little bit better chart than Intel. It's no slight against Intel. Intel's almost 50 years old now, and it's definitely not in its growth phase. So I would consider going with TSM. I think it's a better bet if you're looking for the semiconductor. And if you just want to buy the index, SOXX. All right. So what's your thesis on Teladoc? Okay. Well, I'm actually in Teladoc, and I think Teladoc is going to continue to do well, but I don't know how it's doing today. I think it's doing pretty well today. Let me just take a look at the chart, see how it's trading after hours. Oh, no, there we go. Well, TDOC is the symbol for Teladoc. There we go, Teladoc Health. And by the way, they're based right here in Dallas, which is kind of interesting. They're not quite as highly rated as some of the other medical stocks, but still not bad. Here we go. It's down 7 cents after hours, so it's definitely holding its own. It's not the number one stock. SLP is, but it is looking pretty good. It's Teladoc Health is currently trading at 212.68. And by the way, just for sake of full disclosure, I hold this stock, and I also have sold a call on the stock, a 215 call, and hopefully, I may or may not be called out of that by the end of the week, but that's what I'm holding on. I do think the stock is strong because I do think that this telehealth trend, it's not going away. I think we're going to see a lot more interest in telehealth and going forward. So let's see. I get to people on TikTok. I've been neglecting people on TikTok. So thank you for coming in. Thoughts on swing trading? Well, I am primarily a swing trader. I think that swing trading is a far better way to trade the stock market than day trading. The reason I don't like day trading is because you're trading against the algorithms. And personally, I cannot trade as fast or better than algorithms. So I don't like day trading because my chances of success are less in day trading. Now, there are some people that are very, very successful as day traders. I am not one of them. I am a swing trader. What I look for is I look for companies, highly rated companies that are in great chart patterns. Then when the chart pattern manifests itself, then I will move into the stock, typically to see it move up through the base and hopefully to a higher level, forming a resistance. This is how I trade, and it's very successful. And some of the most successful traders in the world trade this way. I want to indicate that I didn't invent any of this. This is all William O'Neill, who is the founder of Investor Business Daily. And I really, really highly recommend you getting a book that he wrote. And I guess it's been out since about 1980 or so, quite a while now, almost 40 years. It's just amazing. I read this book basically when in the first edition. It really, really helped me, and it kind of changed my trading life. And it's How to Make Money in Stocks, a Winning System, Good Times or Bad. That's, you can pick it up at Half Price Books, or there's a lot of other places that you can get it. You can also get it from Amazon, but I highly recommend getting this because it will give you sort of a primer for swing trading. Now they don't call it swing trading in the book, but they do that. It basically is the primer for swing trading. So, definitely think that that's a great, great way to go. So let's see. This is Teledoc. Oh, and thoughts on Lululemon. I have to admit, I cannot figure out Lulu. I guess it's because I'm not really into the yoga pants. I'm into looking at the yoga pants on really nice women, but I'm not so much into them myself. Because frankly, if I put yoga pants on, people would run for the hills. I'm guaranteed on that. But it's number one in this category, but it's down a little bit today. It's a good composite rating, an 89. I do like that. I just can't figure out what's driving Lulu. It's up after hours, so I cannot figure this stock out. It's a good chart, but it's not a great chart. It doesn't look like it's breaking out. If anything, it looks like it's in sort of a holding pattern, at least for a while. It looks like it's in a holding pattern. So cannot say that much about it. Here, let's show the chart here. It's moved up to above the 40-day moving average. So let's go to there we go. Okay, super. It's following right along. It's staying right above that 40-day line. So that's very good. And it's got very good relative strength. So I cannot, just looking at the chart itself, it does kind of look like a cup and handle to me, though there's one indicator here that you probably don't want to be in it until it's broken out. And it doesn't have quite as enough volume here, but it seems to be a great stock. I have never been in Lululemon. Again, technically, from the technical aspects, this looks great, but again, I'm not in Lululemon. I don't really understand their business model that well, so just my opinion. Thoughts on LCA? Let me look at LCA here really quickly. And by the way, for everybody that's looking on TikTok, I have a action trade alert. It's very easy to get. It's free. You just go to my bio, click on the link, and you'll be good to go. All right, I'm going to show you this chart for LCA. And, I just don't know about this. Blank check companies. I know that it's all the rage. People on, it seems to be all the rage on Robinhood and those kind of platforms. But I just don't like blank check companies. And the reason I don't like them is because I don't know what they're in. Now, it's true there was one that went into Nikola, it seemed to work. And Bill Ackerman has this giant blank check company that's coming out, and everybody, seems to be piling in there. I'm just really skeptical. And I'm skeptical because I don't know what they're buying. They could be buying total junk or totally great. I want to see the chart before I invest. And this isn't really a chart. Though it does have a chart, it isn't really a chart because it hasn't really invested in anything. So I cannot be, I cannot say anything about this. I really wouldn't buy it. And, I hope that that's not offensive, but I just think buying, just throwing money into somebody on Wall Street that they may get something good. I just can't see it. So I wouldn't be invested. Find out what they are going to be invested in before they invest it. And that way you can probably get a better bet. Corvo. Now, Corvo is interesting. I actually hold Corvo. Corvo is a stock that makes a 5G product, and I do think that this is going to be a big deal when Apple rolls out its new iPhone, which will be the 5G iPhone. But let's just take a look at the chart on Corvo. I do like this better than it's down a little bit today, and it's a little bit after hours, but it's still pretty good. I mean, it's got a 94 composite rating. So let's show you that chart. It's number 4 in the category. Number 1 in the category currently is Taiwan Semiconductor Manufacturing. It's an excellent company as well. Corvo's off about 50 cents after hours. It's still got a 94 composite rating. I am in the stock. I bought the stock and then I sold a option on it. I think I am at the strike price or bet. No, I'm not, because it was at 115 was my option price. So I'm still in the stock, and it's not bad. I think that we're going to see it bounce off of the 40-day line, and hopefully it will go higher. Let me just take a look and see when they're reporting. Just kind of get an idea on the fundamentals here. Okay, it's on tomorrow is going to report. So hopefully the report will be good. Here's the thing about reporting. Oops. Well, okay. Well, we had an issue. Yep, there we go. Here's the thing about reporting. Even if a company reports extremely good news, a lot of times it will drop. The stock will drop in the after hours because it's a typical, buy and rumor, sell and news. So I am kind of expecting it to drop a little bit, but I do think that we'll see strength hopefully after that, because I do think that that they will see some good sales. It is in the industry group rank is 48, which is very good, but it is not the top rated like the enterprise software, which is I think number 4 on the list. So I do think it's fairly good. I have recommended this several times. Now, just so that to keep me honest, I will show you my current holdings that I have. There we go. And this is my current holdings for my portfolio right now as of today. So here they are. Currently, I'm holding Netflix. It's down a little bit today. Also, Teladoc, it's up. It's a little bit off after hours, but when this slide was taken, it was up. Blink Charging, this is a very inexpensive stock that provides electrical charging for electric vehicles, and they are compatible with some of the Tesla vehicles as well. Also, Tesla, I have at 14.97. I think it's moved a little bit. I don't know where it closed. I haven't looked at the closing numbers. I do have a call option on this. I've sold a call option for 15.30 on this, and Audio Codes is off a bit. I have a bull call spread on this one, so I don't actually own the underlying stocks. I have the 35 option and the 45 option, and they're both expiring on August 21st. So hopefully it will close on August 21st somewhere between $35 and $45. If it closes above 45, I get, I make the maximum. Of course, if it closes below 35, well, I don't make anything. I lose money on that deal. But so I'm hoping it will close in the range of at least $35 to $45 a share, and that's like my my portfolio. What about Disney? Do you think it will be okay when sports come back? I think, and this may surprise you, I think Disney may be a classic short, and here's why. Many times when you have a stock that everybody owns, that everybody loves, and Disney definitely falls in that category, it becomes overbought. And then when people figure out they probably can't, they probably can't do anything, then they start to sell it. But they start to sell it kind of in the middle of the night. And what I mean by that is the funds will make break fanfare when they're buying stocks. But when they're selling stocks, it's almost a secretive thing. So I think that Disney might fall into this category. I want to kind of take a look at Disney. And the reason I want to take a look at Disney is because there is a classic chart pattern called the head with shoulders, and that is the classic shorting pattern. You look at the weekly chart for this. Yes, and we have a head and we have a little bit of a shoulder. So this is probably going to be a short. Here we go. If you take a look, you see there's a head here and then there's a shoulder. Now, typically this shoulder should be lower than the other shoulder, and this might be a short. It's moved below the 40-day moving average. If it continues on this, I think it may be a short down to about the 84 to 95 level. So I am looking, this is on my short list to short Disney, because I don't think that they are going to be able to get it together because of what they're facing. They're facing just a lot of headwinds in this market. So that's my my take on it. I haven't shorted it yet, but I may short it because of the pattern. I think that the pattern is not the kind of pattern you want to have. So there we go. Okay, any thoughts on AMD? Well, AMD, I had a alert out on AMD, and by the way, just wanted to show to everybody out there, you can get my free Dallas Trading Floor action alerts, and basically all you need to do is just go to Dallas Trading Floor and sign up on there. It's free, and you can subscribe, and you can cancel anytime you like. But I did have an alert. I did have a bull call spread on AMD. I do think AMD is moving into a new kind of range. AMD has always been kind of the second. So it's sort of been the second banana to Intel, and I think it may be coming into its own as we speak. I think that AMD finally now, with some of their new chips for the enterprise, I think they're just doing extremely well. They're down a little bit today, but they're up after hours. I want to show you the chart on it. I'm going to show you the weekly chart. Again, I use weekly charts basically to get an idea of direction, and then for the tactical, I look at the daily chart. So here we go with AMD. It's number one in the group, and that is very powerful. As you can see, it gapped up, and then there's a little bit of a pullback here to 67.70. There is a buy. There is a buy point on. There is a buy point on AMD. It's about, I think, the buy point originally was $60, so it's basically 1.05 up from that. So basically, the buy range is up to about 64. If this thing moves down a little bit more to 60, I think we're looking at a potential buy, because as you can see, there was a gap up here, and then it readjusted back down. I don't know if you can see this on the screen. And it readjusted back down. It's getting ready possibly to readjust and potentially go higher. I do think that AMD is in a very bullish pattern right now, and I do think it's good. You'll also see nice volume increases on it. It's also a composite rating of 99, and it's number one in the group. So I cannot fault it. I think that it may be very, very, very good. So I am very bullish on AMD as we stand right now. So let's see on. I just invested in AMC. Okay, I hate to call you out on this. Please consider selling your investment in AMC, because I know it's cheap. I know you've been there. I know you've seen it, but nobody's going to theaters right now. Netflix is the new AMC. I just hope that you won't get burned on AMC Entertainment. I just hope you won't. It's up today 29 cents, and maybe you can make a little bit of money, but I want to show you this chart. This is a dangerous chart to buy. Let me just show you this chart. Okay, here we go. This is the chart for AMC. As you can see, it is the absolutely wrong chart that you want to be buying. It's going from a upper left-hand corner to a lower right-hand corner. So in other words, it is declining. Also, if you'll notice, it has a relative strength of a 9. That means that 91% of the market is doing better than this stock. So this is not where you want to be. Where you want to be is probably in Netflix. That's where I'm in. I'm in Netflix. I am not in AMC. Even if you can only buy a few shares of Netflix, it's probably going to be a better bet than AMC because of this, because of a lot of reasons. AMC is being divested right now. And I don't think that this is likely to be a very good investment. You're probably likely to lose money. Now, here's the thing I recommend you doing. If you have bought this stock, I recommend putting in a stop loss at 8% below where you bought it, because there's a very, very high likelihood that AMC will drop further in the next few the next few weeks. If you're in the stock, I would consider getting out of the stock as soon as you possibly can. Sorry to be so Debbie Downer here, but I just can't see AMC doing very, very well. Tesla movement direction over the next month. This is a really tough one. I do think that Tesla is seeing some resistance at the $1,500 level, and I do think it's going to be some resistance there. That's the reason I sold my call at 1530. There was an analyst that came out today that basically lambasted Tesla, saying, they're going to have to increase their production, and the sky is falling. I don't believe that, but there is a buy point on Tesla of about I think it's 960. I think it's 968. I can't remember exactly offhand, but this buy point is an IBD buy point, so it's pretty valid. And so even though I'm in the stock, I think I am a little bit overextended in terms. It's a little bit frothy right now, but I do think that we're going to see some resistance at about the $1,500 level. So if there is a pullback, and I normally don't recommend buying anything on a pullback, but if there is a pullback in Tesla to about the 1350 level, I consider buying it, because I do think it is going to move between about 1350 and about 1500. That's kind of my take on it. All right, so let's see. Tell us something about your trade alerts. Well, hey, thank you very much for doing that. I just wanted to tell you that once we get this email server up and running, I've had a little bit of difficulty because I moved away from MailChimp, and I moved to another server. Maybe I'm going to regret that. I don't know. But basically, what they are is that I send out. It's not necessarily every day, but several times a week, I'm sending out trade alerts on how I'm trading. These are opportunities that I'm seeing in the market that you might want to consider doing as well. Things like low price stocks, or bull call or bear call spreads, or sometimes earnings plays. I want to get into the earnings plays a lot more, because those are ways that you can, with a relatively limited amount of money, participate in the moves on some of these really biggest stocks. And typically on earnings plays, I like to do the bear call spreads, because in my experience, most of the companies, even if they're reporting the very best earnings, they typically will drop after earnings, because it is the old adage: buy on news, buy on rumors, sell on news. I had it backwards. So that's the trade alerts are great. And if you're watching on TikTok, all you have to do is to go to my profile, hit that link, and you'll be taken directly to the subscription page, and you can subscribe right there, and it's free. And if you can also cancel anytime you want. So it's just trying to build my list so that I can present you with some good money making opportunities. And it's free. It's free trade alerts, and I'm going to put it up on the screen again. Once again, it is DallasTradingFloor.com, and then just go to there, and then just fill in the information. So there's two ways to do it. If you're on TikTok, just go to my profile, hit the link. If you're on anything else, if you're on Facebook, YouTube, Periscope, or Twitch, just go to Dallas Trading Floor and fill in the subscription. And I thank you very, very much for that. All right. So any thoughts on UAVS? UAVS, I don't know that one. UAVS. Let's take a look. Oh, is that Anglo Ashanti? Okay, no. Oh, Aerial Systems. This is an interesting one. Yeah. I think I may have done an alert on this one. This is a very, very interesting stock. This is an under $10, very, very Very good stock. So let me see if I can get a leaderboard. Well, I can't get a leaderboard. I know I could get a leaderboard chart on this one, but let's look at it. Anyways, let's just look at the chart here. It did have a little bit of a blow off, and I'm going to show you the weekly chart. This is the one you really want to look at. And you can see it's starting to move. It's a very, very inexpensive stock. I typically don't like stocks that are in this price range because they typically are much more volatile and they're harder to call. But I do like this. I do like this stock. It has a very good composite rating of 85. Anytime you get a priced stock like this that has a rating of 80 or better, it's definitely worth your while to take a look at it. The chart action is not bad. It's not great. It's very, very hard when it's this low price to see the chart action. There has been a little bit of selling on it. This stock has not been discovered yet by the funds. This is mostly retail investors in here, and that's part of the reason for the low price. Once you start to see some more institutions move into the stock, it probably will move higher. But very, very good. Thanks for that. I so appreciate it. And by the way, I do cover these kind of stocks on my Action Trade Alerts. And all you have to do to get that, of course, is to go to my bio, hit the link, and just type in the information, and you'll go right to the Action Trade Alerts. All right. So I'm in Corfo at 118. I'm thinking about holding through earnings. Okay. Well, if you're going to hold through earnings, you're more than likely going to see, you're probably going to see it drop a little bit after earnings. That's typically the way it goes. But I think the long term for Corvo is good. I'm in the stock myself, so I do think it's going to move up. But you might want to sell right before earnings and then buy it back to see what happens, because I do think we may see a little bit of drop in earnings, and I appreciate that. I appreciate that very much. So let's see, another question from TikTok. Thoughts on Square? Continue to grow. I bought it at 34. And wow. Okay. This is a very good, thank you for this. This is excellent, by the way. By the way, you bought it at 34 and it's already at 123. Here's what I would consider doing. Typically, there's what they call the 20% rule. And the 20% rule basically says that if a stock goes up more than 20%, consider taking profits. Now, obviously, you don't have to sell all of them, but typically figure out what the basis in the stock would be. So if in this case, the basis in your basis in Square was, say, $34 times 100 or $3,400, and now it's trading for $134, and the basis is essentially $100 higher, consider selling your gain. Consider selling basically $10,000 worth of the shares so that you maintain your same basis that you started out with. Take that in cash, and that's a very good way to do it. So if the stock has gone from $34 to $123, that means it's gone up over $90 a share. So if you have $100 in there, you might want to consider, if you have 100 shares, you might want to consider selling 90 of those shares, keeping the 10. Basically, that's your original investment, and putting all the profit in the bank. And the reason is because you can use that to move on to other things. That's very, very good. Excellent. And I want to take a look at the weekly chart for Square. Square just keeps going higher and higher. This is a very nice chart. 123. It's down a little bit today, but it's just a tad up after hours. Excellent composite rating at 97, and it is number one in the group. And this is a group that I very much like. It's a fintech group. Another stock, a perennial favorite in this group, is PayPal. I do think that Square and PayPal, these are becoming the new banks. People are going to, small merchants are using Square. The great thing about Square is it's just, you have a reader, it just sticks in your iPhone, and boom, you have a credit card machine there. So it's pretty amazing. And, just a tremendous company. I think Square is great. And, I would probably, I'm not in Square currently, but not a bad stock to be in. I think that this is an excellent looking chart, and it seems like it's moving a little bit down. It seems like we may see a little bit of settling on this. But I do think, if you're in this and you've made some money, I think that if you've made 20%, consider selling your profit out. Taking your profit out. that's one thing I always like there's an 8% rule, and that of course is if the stock falls. But there's a 20 to 25% rule. If the stock goes up 20%, you want to consider taking some of your chips off the table from 20 to 25%. This is not always the case. Typically, it has to go up 20 to 25% within more than 3 weeks. If it's less than 3 weeks, just hold it. Don't do anything. You're on a rocket ship. But if it makes that 20% gain, 20 to 25% gain in 3 weeks, in more than 3 weeks, then you want to possibly consider you up to about 8 weeks, you possibly want to consider taking some of the chips off the table. That's the 20% rule. And by the way, this is a IBD. This is a William O'Neill rule, and you can read about it in How to Make Money in Stocks: A Winning System, Good Times or Bad. And it's available, of course, at many bookstores and also at Half Price Books. That's where I got my copy. Okay, great. Let's see. Micron. Thoughts on Micron? I love Micron. Is a really great technology, really great company. Now, here's the interesting thing about Micron. It is, I believe, misclassified in the sectors. It's classified as a data storage company, but it really is a semiconductor company because they don't make physical hard drives like Western Digital. It is down a little bit. This is a very, very volatile stock, and it typically has it's very, very cyclical. What do I mean by that? Well, some years it seems like in some years Micron Technology just absolutely mints money, and then another semiconductor cycle happens, and they don't make any money for 18 months. It's basically tied to what they call the semiconductor cycle, which I don't know if you've heard about this, and you might want to Google this. It is Moore's law. Typically, is in effect with this company to a tremendous extent. The thing about this is it's second in its group. So in the data storage group, it's doing excellent. It's doing excellent. But I don't think Micron really is a data storage company. I mean, it is because they make memory chips, but it's really more of a semiconductor company. So this is a very strange stock in that. The problem with this, I don't like the composite rating of this. It's only 67. Right now, it's a tough stock to buy. As you can see, it's moved right down to the 40-day moving average. So I do like the company. I have been in the stock. I've made money on the stock, but I think it's a tough row because it's not highly rated enough for me. I typically like to see a stock that is going to be doing a little bit higher. And I want to show you this. It's got a very low industry group rank, and I think it's partially due to the fact that it's misclassified. This is just the way it went into the IB. This is the way it went in, and it's very hard to change it from that. But the industry group rank is only 148 on this out of 197. I typically like to be in stocks that are in the top third of all the sectors, and that way it gives you a better chance of success on that. So that's my take on Micron. All right, what book are you talking about? Well, I'm talking about a book. It's by William O'Neill, and you can Google this, or you can type into Amazon. Amazon's wonderful for this, and it's called How to Make Money in Stocks: A Winning System, Good Times or Bad. And I think it's in the third or fourth edition. I don't know exactly what edition it's in. Very, very worthwhile getting. You can get a used copy; they're out there, or you can buy a new one. But Winning System, Good Times. A Winning System, Good Times or Bad by William O'Neill. He is the father of modern charting. And there we go. I'm going to hold up the copy of the book, and I'll give you the ISBN number as well. But I'm going to hold up a copy of the book. Here you go. Up there, can you see it? There we go. How to Make Money in Stocks: A Winning System, Good Times or Bad. And as you can see, it's kind of pixelated with my green screen. By the way, if you want to see any of the charts that I have, you want to see my slide set, I will show you that now. I have created a URL for today's slides, and there it is on the screen. It's kind of complicated. You aren't going to be able to see this on TikTok, but you're going to be able to see this on YouTube at youtube.com/DallasTradingFloor, and the URL is bit.ly/32 lowercase r, lowercase b, lowercase r, lowercase j, and the letter 6. So if you are interested in getting a link share to the slide set today, just type this into your browser and it'll be good to go. And you will see that on the screen. And again, if you want to sign up for the trade alerts, it is it is at Dallas Trading Floor. And if you want to see this on YouTube, you're looking on TikTok and you want to see it on YouTube, it's youtube.com/Dallas Trading Floor. So I'm almost at the last of the questions. Thanks so much for looking. And what are you doing? Okay. Well, let's see. What site do you use? Well, I use for a lot of my charts. I use the IBD chart, the IBD site, the Investor Business Daily site. This is a pay site, but it is available, and there is a digital edition as well. So I probably should be getting a commission from them. Anyways, I will be back tomorrow with my show, and hope to see you then. If you have any questions, and I can possibly answer them offline, just go to dallastradingfloor.com, and then there's a little comment section, and I answer the questions off there. So just type it in, and you will hopefully get an answer from me as quick as I can get to it. Thanks again for watching. I'll be on tomorrow at 2:30 to 3, Dallas Trading Floor. Thanks, and love doing the show, and I love hearing from everybody out there. See you tomorrow.